Check it out, guys. So GameStop just recently reported earnings and their stock went down 18% today. Unbelievable. Let's break down what is going on, the numbers, my thoughts, all that good stuff. Let's talk. They ended up reporting revenue of $1.24 billion, which missed the estimate. I'm not exactly sure what it was, and it's down from $1.38 billion last year. And they did EPS. They lost 17 cents per share, which also missed the estimate. But on the plus side, guys, you can see right here, their net loss narrowed to $50.5 million, which is a lot better than last year when they lost almost $158 million. And I'd say the biggest piece of news is the departure of their CEO and the fact that Ryan Cohen was named executive chairman, which is it's a pretty big deal, guys. And if you guys didn't know, Ryan Cohen's actually the company's largest investor. I'm not sure exactly how much of the company he owns, but I believe when he first bought in 2021, he bought 13.5% of the company. I'm not exactly sure. I have to double check, but yeah, he's the largest company shareholder right now. And check this out, guys. After the company reported earnings, which they double missed, and their stock got destroyed, he tweeted this, "Not for long." You guys can see right here at 4:24 p.m., June 7th, he tweeted that, which means, well, he believes the company's going to rebound. The stock's going to explode. What do you guys think?